Welcome back to another weekly market and financial update. So, if you checked your stock market portfolio this morning or you looked at the stock market news, you'll notice that the stock market is actually down quite a bit today. And the recent news around why the stock market is down is really due to geopolitical tensions, especially in the Middle East. The White House earlier today came out and said they are actually anticipating a ballistic missile strike from Iran against Israel. And because of that, crude oil prices have spiked pretty significantly. And in response, the overall stock market has really declined since. And right now it's about 11:45 in the morning, and the market is down about, I would say, anywhere from 1.5% to 2% when I checked different indexes a few minutes ago before recording this video. So again, the reason why I bring this up is, war in other countries, of course, is a horrible thing to have happen, and our hearts at Vision Retirement go out to all the folks that are impacted by it in the Middle East. But a part of our roles as financial planners is to have some of these more difficult conversations with clients and folks who are thinking about the concerns around political tensions, whether it's domestic or overseas, and the implications it can have on the stock market as a whole. So I don't really know for sure what's going to happen. It's probably a good thing that the news has gotten out about this before something has actually happened, and hopefully some intervening can take place and sort of settle these disputes calmly and peacefully. In the event that this can't happen, then there definitely will be some continued volatility in the markets as these political plays continue to fold out. Not really sure what will happen on that front, but we've been talking about the rise of volatility over the last few weeks, and this is just another contributing factor to the rise in volatility in the overall stock market. So again, it's probably going to be a short-lived thing in terms of the markets and how they impact. Again, if crude oil is impacted, then of course you would expect oil prices to rise, which will increase the energy costs on our homes. It will increase energy costs when we fuel up our cars at the gas tanks. So that could definitely create a rise in costs there as the rest of the market continues to handle this news and sort of smooth itself out. So the real rationale around this is that if you're thinking about any investment decisions around it, it's likely to be relatively short-lived, and there really isn't too much that most folks can do. The one area of the market that has actually responded quite well to this news are really safe haven investments. So any worried investors about these geopolitical concerns tend to flock toward very ultra short-term duration investments. Think very short-term treasuries. Short-term treasuries tend to do well in times like this. And gold. Gold is another asset class that really right now is pretty much approaching an all-time high, and that's just due to the fact that gold is tangible. It's something we can see, touch, and feel, and a lot of folks consider that to be a very safe investment in turbulent times because gold is something that can be traded pretty easily. Again, it's tangible, it's something we can hold on to, so we know that just by visually looking at gold that we own, we know that we have some form of wealth. And that's why a lot of people tend to gravitate towards gold and short-term treasuries. So if this is something you're sort of thinking about, again, not saying that you should necessarily go crazy and put, 100% of your portfolio into gold, but right now gold is up. So anyone who has any sort of commodities or gold allocation within their portfolio, even if it's a small percentage, will notice that area of their portfolio will be up as the rest of their portfolio is probably down because the equity markets are down. So again, just these sorts of things are important to discuss, even though they are tough conversations to have, especially when we're thinking about the upcoming election and whoever will take place as our upcoming president. It's important to understand their views and their policies on geopolitical issues and concerns, because a lot of their geopolitical issues that they're going to address will have impacts on situations like this when there are tensions that rise in the Middle East, when we have a trade dispute with China per se, or India is having some economic issue and we need to go provide assistance, right? I mean, the list can go on and on and on of all the issues that happen around the globe at any given time. So again, knowing what each candidate will sort of do and what they're more likely to put into place when it comes to geopolitical concerns is important, and will have a more long-term effect on the stock markets when these situations arise. So To sum up what we're talking about, again, just the short-term message is volatility is here right now. I would expect it to continue to stay until the issue in Iran and Israel is somewhat resolved. And from there, we'll just keep an eye on everything else. But other than that, in the good news, right, is the Fed has lowered their rates. So by 50 basis points, and the market has responded, besides today, really, the market has responded very, very nicely to that. And I think this is giving the Fed a good sign that there is a chance that they could continue to lower rates throughout the rest of the year. So again, short-term volatility with a sprinkle of good news. So thank you so much for watching today's video, and I hope to see everyone next week. Take care.